Tom, what are your expectations in terms of what we may see this week, starting with today?
Sure. So the big challenge for Apple is how do we think about their software, their new operating systems when they can't get the hardware in the consumer's hands. So basically, at the industry-wide level, I think the big question is, what, if anything, more can Apple do with privacy, which has had a big negative impact on Facebook and Snapchat and others. But again, I think the challenge for Apple right now is on the hardware front when you think about the disruption they have to their supply chain and to the June quarter from a sales front.
All right. So that said, is there anything that you think will move the needle in terms of what they introduce on the software front?
Sure. So on the software front, if you think about anything that advances their services, either on the fitness side, the health side, the Apple TV, I think, is starting to gain some significant traction and is nibbling at Netflix. So on the software side, there's talk about things on making it easier to view things on the Apple screen when your computer's resting, things of that nature. But those are the things we'll be looking for from a software standpoint.
Tom, I'm curious if you think estimates for iPhones for this fiscal year, for this current quarter, will have to come down, and that has not been yet factored in.
If you think about when they gave their outlook for the June quarter, they talked about the 4 to 8 billion of disruption, but they said the good news was that the manufacturing capacity in China had come back online. So I think there's reasons to think that the June quarter, while still down 4 to 8 billion from supply chain challenges, will meet the initial expectations that management laid out.
How do you think, Tom, about, for instance, services and the growth in services and it being able to, I don't want to say fill the hole, but fill the hole from the decline in, or not the decline, the slowing growth in iPhone sales? Because right now that's really the dynamic that we're facing.
Yeah, and in that regard, I think Apple has a strong hand on the services front. I still think Apple could offer Apple as a service, not unlike cable, where you pay a monthly subscription fee for Apple hardware and Apple services. So I think there's still that opportunity. And the good news is, on a relative basis, the services revenue is higher margin than the hardware revenue. So I think it can fill the gap, or however you want to phrase, offset challenging hardware sales on supply chain issues.
Tom, another name that you cover that we're watching today is Amazon. Shares continue to show a lot of strength after that 20-for-1 split finally took effect. When I hear split in Amazon, though, I always wonder, do they ever get around to actually the bigger split, one of the business? I'm curious how you might view that, whether they ever will, and whether it would add value to split retail from AWS, for example.
Yeah, so the way that I think about sum of parts on Amazon is the cloud computing effort is incredibly valuable. The advertising business, which they're now disclosing, is incredibly valuable. The 56% of units sold by third party where Amazon collects a commission is also valuable. The 44% where Amazon's first party seller, oftentimes at a loss, that to me is worth zero. So when I do sum of parts on Amazon, I have a hard time getting a bigger valuation, though recognizing that individual business units like cloud computing, like advertising, might be negatively affected as Amazon as a whole is facing the slowing e-commerce business.
Shepard Smith here. Thanks for watching CNBC on YouTube.